Hello and welcome to the video. Today we are discussing whether cryptocurrency bears are dead following the monthly closes in Bitcoin dollar and Ethereum dollar. I like short intros, you like short intros as well. Like the video, subscribe to the channel to keep them brief. Promise that's all I've got, but it is appreciated, and let's get straight into it. So, we're still dealing with monthly levels in Bitcoin dollar and Ethereum dollar. The same level comes out at 13,863 on this data feed, which is Coinbase. So looking at the open, high, low, close data of the most recent monthly close, it suggests that resistance has held and price closed below this level. Now, an immediate refutation may take the form of looking at another data feed, such as Binance, and arguing that, well, Binance closed above this level. So how can it be resistance if some are closing above or some are closing below? At the very least, it's not clear. Now, in my view, and this is something I've picked up from Donald, when you get ambiguous high time frame closes at structure, it generally makes sense to be conservative and defer to the idea that structure has held rather than structure has been broken. Or perhaps to paraphrase or put more simply, if you have to question and ask yourself and look at several data feeds to come to a decision as to whether structure has been broken, it probably hasn't been. Unless it's clear to everyone and there's no ambiguity, generally it's reasonable to defer or kind of fall back to the more conservative position that the structure is intact. So whenever, no matter the time frame, I get a close that's on top of structure, and that's not screaming to me that, oh, this is definitely broken or this is definitely toast, I generally assume that it's intact. So in this instance, given how any data feed looks at this 13.7, 13.8k level, the slight variations don't change the fact that we kind of closed on top of the level, so I'm going to assume that the structure is intact until proven otherwise. And I hope that makes sense. If it doesn't, of course, as always, I'd love to hear your thoughts in the comments. Now, where does that leave us? And I do recommend you go watch the video about 14k resistance on the YouTube channel. There are some insights which I'll borrow from in this video, but just to add some further depth and levels to this monthly roadmap, I think at this point we can now map out and draw some levels on this pre-breakout consolidation. So basically the 2 months of ranging and retesting 10.7, which preceded this most recent leg higher, or perhaps viewing it technically, just simply an impulse, the range, and then another impulse. And it's the pre-impulse range that always has technical significance. So we can delineate that and give it shape in this form, highest close and lowest close as always. And if we look on the weekly time frame, well, we'll start with the monthly. You can see the lower boundary of the level aligns with our 10.7 level, which has proven itself to be very significant. And on the weekly time frame, this 11.6 area is our weekly support resistance flip going back to this range in the mid 11,000 price handle. So certainly some significance either way, and levels not to be ignored. So what can we derive, or infer rather, from the monthly time frame? Well, given the close at resistance, or the resistance has been intact, generally, when I expect, or my trading framework suggests, that price moves from one structure to the next. So if resistance is intact, I'll generally expect price to move towards support. Okay, just like the inverse worked on the way up, whereby monthly resistance at 10.7 held, and we got a move towards resistance. This recent monthly close signals to me that resistance has held, or is likely to hold, and that is suggestive of a move towards support, which starts for me at 11.6k. Now, a consideration that we discussed in the previous video is that although it is possible and plausible, and certainly not out of the realm of possibility, that price simply closes below the level and then just nukes straight away into structure, we must consider the possibility that we get a rally above the level, which does ultimately pull back and get swatted down closer to the level itself. We don't need to look far for examples of this. It actually happened at 10.7 monthly level. So if anything, that adds some force to our argument that there is technical precedence, or a technical precedent, for monthly closes being reliable and working in this instrument. So in this case, technically, the chart was bullish when we had closes above 10.7, so highest close resistance, close above it here. At that point, the chart is bullish, right? On this close, the chart is still bullish, and all the closes are holding on the monthly basis. But then if we look at this candle here, as positive and clean as it may look, that you just get a retest and then a move higher, what you'll recall, as we've discussed in previous videos, is that the low of this candle, despite it being a fairly straightforward kind of technically retest move higher candle, the low violated the level itself quite significantly. So the level lands at around 10.7 and the low comes out at about 9,800. So that's non-trivial in terms of how deep can price go, but structure still hold. So we can ask ourselves the same question at resistance, right? So in this case, we had how deep can price go, but support still hold. If we delineate our level at 14K, we can ask a similar question of how much can price violate this structure, but it still hold as resistance on some sort of closing basis, or at the very least, if we get a significant deviation above the level, how far can that reasonably go before price settles back to structure? So hopefully you can start to carve an answer as to are cryptocurrency bears dead following the monthly closes. In my view, there still needs to be more evidence for that to be valid, given the monthly close at resistance, even if we start rallying above the level, just like we had bears selling below monthly support and ultimately being punished and being the wick. We can see the same to the upside of breakout buyers above the level, offering themselves as a sacrifice for the high time frame wick before price settles closer to the level itself. For what it's worth, my gut kind of instinct, personal view, which are all very loosely held, but whatever, just throw that out there. I think it's likely we get some sort of range or consolidation environment between these two high time frame levels. I think with the available evidence, that's more plausible than a kind of easy support resistance flip and a run to all-time high. But of course, that begs the question, if we had a significant violation of support to the downside before ultimately the level doing its job, where can we expect a reasonable violation to the upside to turn around before resistance does its job, or at the very least price settles closer to resistance and spends more time here before eventually moving higher? And I think we can get some hints as to where that may form on the weekly time frame. The structure that I want to bring your attention to, if we add or bring back our levels, you can see the 13.8 is pretty important on the weekly time frame. It follows a certain logic that I like in my charts, whereby you have lowest closes generally being good support resistance, highest closes being the mirror of that and still reliable support resistance structures. So if we kind of build this range as our kind of pre-breakout structure, we can come up with something, technical reference points derived from the lowest close, the highest close, and then the midpoint within this consolidation, which kind of preceded the high and was technically significant one way or another. So doing that, if we just quickly take the fib tool, and again, the same logic, lowest close support, highest close resistance, and then we also get a midpoint, we come out with 3 levels to pay attention to, or 2 new levels, perhaps would be more accurate. What are those and where do they come from? Well, of course, the bottom of the range level, the level we're dealing with now at 13.8. Again, is it plausible or reasonable for price to just simply reverse from resistance and go to support? Yes. Is it still worth being aware that if price breaks higher, where it could turn to form that high time frame wick? I think it's helpful at the very least to have a roadmap and know where to hedge or take some risk off or sell or do whatever fits your risk profile should the market start rallying higher. And those 2 levels for me are the midpoint of this range at 15K and then the top of the range at 16K, right? And so what these levels are essentially candidates for the high time frame wick should the monthly resistance do its job eventually. Just like we had monthly support here at 10.7, it was violated significantly, right, by this low at 9,800, but ultimately did its job. If we transplant that logic of price violating high time frame structure to an uncomfortable extent before the structure still does its job, we kind of need to look at levels, just like we looked at levels below support for a wick. At monthly support, we have to look at levels above resistance for a wick in a very similar fashion, right? And that's simply where these 2 levels come in. Again, using this pre-breakdown range here, I think high time frame wick candidates to the upside would be 15K and 16K. Again, this doesn't mitigate the case of price simply going from A to B, but I just want to have an informed perspective should price rally higher. I'm not just sat there waiting for the monthly close and doing nothing, although that is still a valid strategy. I want to have these potential turning points in mind if we get a rally above previous month's high following the close. And again, that wouldn't be unprecedented because that's what we had here. Violation to the downside, support does its job. We can have violation to the upside, resistance does its job as well. So it's important to have something, I think, above market and just not simply expecting price to roll over. Could still do so, but it doesn't have to, so we want to be informed either way. So hopefully that perspective is helpful for Bitcoin dollar. Again, I would much prefer for this thing to just teleport to all-time high. It would make my life very easy and improve my circumstances most significantly. But I don't take anything for granted in this market. And I think even if we do start rallying and looking very positive in the short term, simply because of how reliable the monthly closes have proven themselves to be with recent price action, and pretty much this entire move from 10.7 being telegraphed from the monthly time frame, I want to pay it the same respect at resistance that I paid it at support. Perhaps that's the most neutral way I can convey that point. And this also goes to answer the question, are cryptocurrency bears dead following the monthly close? I don't think so. And even if we do start rallying, I think there are reasonable technical areas to perhaps manage one's risk, to use a cop-out crypto Twitter term. Okay? We can answer the same question for Ethereum. Are cryptocurrency bears dead following the monthly close? And you all know the level that I'm going to draw now, hopefully. It comes out at this monthly. I've got a fly in my back. Never mind, just flew into my shirt. We're not going to worry about that. We have the monthly support resistance flip around the 390, 400 handle. Fantastic level. Pretty much the best level on the chart, right? Highest close, lowest close, support resistance, etc. flip. But again, on the closing basis, it's actually one of the ugliest monthly closes I think that we've had at high time frame structure, whereby you had a close above the level, looks fantastic, close below the level, yikes, suggests a bearish retest, and then the next month, which could have rescued this picture and painted a picture of continuation by closing above the level, or ideally above the highest close of the fake out. Instead, we had a close below or at structure, which suggests a bearish retest until proven otherwise. And in terms of adding structure for ETH, I think the first port of call for support is the monthly level at 290. And as we've discussed ad nauseam at this point, the monthly levels, they need to be perfect, and it's reasonable for price to wick through them and violate them to what seems like an unreasonable degree before ultimately settling closer to the level itself. Okay? So for ETH, which has been struggling even relative to Bitcoin in the past few months, are cryptocurrency or Ethereum bears dead following the monthly close? Well, from the available evidence, 400 or the 389 level is the best level on the chart for me. And we've had a failed breakout at structure, and the past month or the most recent monthly close has done nothing to change that, and it still suggests a bearish retest at this level until proven otherwise. Okay? So what's the sum total of everything we've discussed? I think it's a decent point to be conservative, or to at the very least, be aware that rallies, which may happen early on in the next month, could be high time frame wick forming. We had Bitcoin closing at resistance, with some nice levels above market for a potential wick, but also I think a scenario that's not being entertained enough is a simple range between an area of high time frame resistance at 13.8k and an area of high time frame support at 10 and 11k. Something to be aware of, but purely for the monthly close, resistance remains intact, and I will certainly be skeptical of rallies should they form, especially as they begin to reach two levels, so nothing too difficult to consider, at 15k and 16k. Okay, Ethereum looking slightly worse for wear than Bitcoin. Did the monthly close kill all bears? I don't think so. They got a bearish retest at one of the nicest levels on the chart. So again, reasons to be cautious and or conservative, even if we start rallying above this structure. Could it be the high time frame wick forming? It's not unlikely, or there's a non-trivial chance of it being the case. And until we get a clear up of this monthly structure, ideally with a monthly close back above 400, or if you're being very conservative, back above the breakout highest close, which is at 433, the more probable path for price, in my view, is to retest support at 300. Okay? That's all I've got for this video. Leave a like if you liked it, subscribe if you loved it, all of that type of stuff. We appreciate your audience, and I'd love to hear your ideas in the comments as well. That's all we've got for now, and any important updates you'll see on the channel, so make sure to hang around. Thank you for watching, and I'll see you in one of the live streams, which take place every Monday, Wednesday, Friday at 7 UTC. Take care, trade safe, goodbye.